There's a couple of different proposals that are out right now. One is to extend the unemployment benefits to $600 a week. The other is to provide a back-to-work bonus, which I don't think people have really thought through this idea yet. The idea is to pay people to go back to work, right? We want to get them off the roll, so if you go back to work, we'll give you a benefit. Well, the problem is that people just can't go back to work. It's not like people are sitting around right now going, hey, I'd really like to go back to work, but I'm just making so much money I don't want to. I mean, yeah, that's part of the problem. But the other part of the problem is that companies aren't hiring right now. They're hiring, when we look at the hiring that we saw over the last couple of months, where we're seeing it, well, we're seeing companies go from 0 employees, restaurants that were shut down, to some employees. So yeah, we're seeing a pickup in employees in terms of leisure and hospitality and restaurant workers and those type of things. But we're about to start seeing white collar layoffs on a lot of companies. Today, we have numerous companies that are trading well above 10 times sales. And these are companies that you know. Market Access, Paycom Software, ServiceNow, NVIDIA, MasterCard, Adobe, Visa, Intuitive Surgical, Duke Realty, Realty Income, a lot of real estate companies, by the way, Public Storage, Intuit, PayPal Holdings, Microsoft Corporation, Netflix, Edwards Life Sciences, Salesforce.com. These are all companies you know. They're all trading well north of 10 times sales. Paycom Software is an example, which is one of the kind of the hot stocks right now that people are all chasing. They're trading at 24 times price to sales. Market Access, which provides market data about the market. All they provide is just data about the market, trading at 34 times price to sales. What were you thinking? But this is why it's important to do a bit of research, right? Because again, if you go look at buy, sell, hold rankings as an example of the markets, and I ran some analysis just for the show this morning and for this article, but I ran an article on 4,600 stocks that are all covered by Zacks Research. And I said, just tell me how many of these have an average buy, sell, or hold ranking. Out of 4,644 stocks, 4,280 of them have a buy ranking. So you mean to tell me out of 4,600 stocks, 4,280 of them, you should buy them? Fundamentally, technically, they're all good stocks to own, right? You should buy all 4,600 out of 4,800 stocks. Got notice from our kids' school district yesterday that they're trying to figure out how to deal with getting kids back in school for the resumption of the school season that's coming right up here soon. And I've been complaining about the fact that if our kids aren't going to school, I want my school taxes back. Well, I figured out how they're going to wind up spending my tax dollars.
How are they going to spend it?
Got a notice yesterday they're going to spend $50 million buying every student a laptop.
Oh, really?
Yep. So they're going to get Google Chromebooks. So buy Google stock.
Yep.
And they're going to give them to all the kids so they can basically do online learning at home.
Who makes the Google Chromebook?
Google.
China.
China. Maybe it's the Canadians. I don't know.
I highly doubt it.
Well, there was a poll out this morning, right?
Yeah.
Somehow, I don't know. Look, Canadians are the nicest people in the world, right? If you ever go to Canada, they are the nicest people in the world.
Treat you wonderfully.
They do. And there's only probably about 1/3 of Canada that's actually inhabitable anyway. So
that's in the summer.
But somehow, we've managed to tick off 1 out of 5 Canadians. 1 out of 5 Canadians in a recent poll view the U.S. as either unfriendly or an enemy.
What have we done?
I don't know. Apparently, we sent them Jim Carrey back. I'm not sure.
Oh, well. So you're saying there's a chance.
I'm saying it was either him or Justin Bieber. One of the two.
Well.
But there you go. Anyway. Market capitalization is one of the worst single measures of valuing anything, especially when it comes to your portfolio, because that leads you ultimately into way overpaying for investments that you make, and ultimately you're going to have a poor outcome. Right now, Amazon has been on a huge run, right? So full disclosure, we own Amazon in our portfolios. We have to. Why? Because it's going up. You got to pay to play, right? So we have to own it. But fundamentally, it's not justifiable where it's currently trading. I mean, we just wrote an article yesterday talking about valuations, and we put a list of stocks out that, we're all trading above 10 times sales, right? Well, Amazon trades well north of 5 times sales. That's very expensive. Very expensive. That assumes that Amazon can grow their earnings at about 300% a year forever, right? And it's just simply not possible. You've got so many other layers that are affecting the economy right now. Besides debts and deficits, you've got, lockdowns from the government. You've got people quarantined because of issues. You got this, every day, every minute is about the virus on television, which is scaring people to keep them from getting back out into the marketplace and going back to work and doing the things they want to do. We're shutting down schools, which keeps parents at home. All these issues are outside the fact that we're bolstering asset prices, and that's not going to translate into stronger economic growth.
And Lance, how many people, we've talked about how many people own stocks, but let's first of all forget people that own stocks in their IRAs or 401ks, because I don't think they look at that and say, oh, I'm going to go spend money because my 401k was up 2% today. That's money you're not going to see for a long time, and you need it in the future. So how many people own stocks in enough size that when the market's up 2%, 3%, 10%, they're going to say, I'm going to go spend some money? The answer is very, very few.
So Mike Lebowitz joining us live from Maryland. So wait, I got to talk about this elephant in the room here for just a second. So you're up there in Maryland. A previously Redskins fan.
Still a Redskins fan.
I know, but they're going to change their name
for a few more weeks at least
to the Washington Snowflakes, whatever it's going to be. I stole that, by the way. That's not my original idea. Credit to Russell Sherrill for that idea. So we have to give credit where credit's due. Russell came up with that,
and it's a good one.
There you go. But yeah, you're wearing a Cowboys hat. What's up with that?
So first of all, Lance, before we go to the Cowboys, I'm experienced with name changes. The college I went to was the Redskins when I were there. Uh-huh. They changed to the Red Hawks in the 90s at some point. My basketball team, I grew up with the Bullets. They're now the Wizards. So this is my third name change. The Washington Redskin football team it sounds like it's going to change the name in the next, by the next football season. So this is old hat for me. So
well, old hat or new hat?
Old hat and a new hat for me. I am not a Cowboys fan, though. Our colleague Connie Mack and I made a bet back in April about where the market would be come the 1st of summer, which was June 21st. And obviously, I am not the winner. I was too bearish. Connie correctly thought about the Fed and put the Fed into his forecast, whereas I didn't. So here I am. I'm wearing a Cowboys hat. I'm not happy about it. But Connie, I hope you're watching. And,
oh, he is. Trust me.
And I'll wear it. It's going to be on for another 25 minutes. And then after that, it's being returned to my neighbor.
There you go. So basically, how does crow taste this morning? I guess is the...
Let's just get this over with.